Hi everybody and welcome to the London session update with myself, Kathleen Brooks, on Friday the 1st of March 2013. Well, it's been a day of very significant moves. Now, everyone thought that the focus would be on the US sequester. Remember, those public sector spending cuts are expected to come into play later tonight. However, the focus has actually been on Europe and some very dismal data. We saw some quite weak PMI data, especially out of Italy. We also saw some very weak data out of the UK on the PMI front, which caused cable to fall below 150 for the first time since June last year. We also saw a record high in the unemployment rate in the Eurozone, and we saw some very weak inflation. It seems to be that inflation print that is really hijacking the markets at the moment, because now, as we lead up to that ECB meeting next week, we've got weak growth and weak inflation. They seem like the perfect combination for the Eurozone Central Bank to be much more accommodative, to maybe even start some sort of loosening policy, potentially as early as next week's meeting. So let's take a look at what Eurodollar's doing. Well, look, there you go. We've actually been trying to hold on to that 130 handle, but we have dipped below it a few times today. The weekly close will really be pivotal here, but as you can see, the red line in that chart, 200-day moving average, that is a key level. If we get below there and get a weekly close below 130, it would open the way, we think, to 128 as we lead up to that meeting. We think life sub 130 is really on the cards now for Eurodollar, and has been since yesterday when we got through the bottom of the daily Ichimoku cloud at 130.50, and that suggests that we're at the start of a downtrend now. So everything that we've seen since November, it's all beginning to unravel. It's all beginning to unravel a little bit on the back of this very bleak growth outlook. Now, the other thing I want to show you is the gold chart. So this is the gold hourly chart, and I'm showing you a very short-term chart of gold, because as we've seen things like the euro fall off, the dollar do well, we've seen the pound come off quite sharply as well, we've actually seen gold do the opposite. So gold has pushed higher today, got back to that kind of 1580 level at one point. And what was driving this? Well, there's a few things, and I think the key thing again is Europe, not just the sequester. I think that it's Europe because in the past, no one had really thought that the ECB would do monetary easing. Now that inflation is quite weak, they may do that. So they may loosen their monetary stance in the coming months, maybe even as early as this month. And that is when you get more liquidity in the world, that should be good news for gold. Gold's also gold tends to be the ultimate QE trade at the moment. Of course, there could also be some fears, some safe haven flows as we await to see this sequester. Now, the one thing I would say is that if we do get a last minute deal on these sequester cuts, we could see a few gap openings on Sunday. So on the Tokyo Open on Sunday, do watch out for that, because we think that if there is some sort of last minute deal to avert these cuts coming into place in the US, then we could see the euro rebound, cable rebound, and the dollar start to pull back. So do watch out. Right now it's quite uncertain, but life below 130 for Eurodollar certainly seems on the cards. Thank you all for joining. Have a nice weekend and join us next week for more. Thank you.